Hey there, it's Melissa with Atlas CFO. Today we're talking about construction terminology. There's a lot of terms and acronyms that get thrown out in our industry, and today we're going to break down just 5 of them. If you haven't joined us before, just a little bit about Atlas CFO. We are a company that serves the construction industry on the financial side. So we have courses, software, and training, and even some services that help the construction business owner take control of the financial side. So today we're going to break down just a few of these terms. I put just a laundry list on the screen so you can see how many different terminology there is just within a quick brain dump of acronyms and names and things that we talk about, and they may be confusing. They may not mean the same thing whenever you hear them thrown around. So today I'm going to pick 5. We're going to talk about just those. So the 5 that I picked for today are WIP, which is one of my favorites, ROA, backlog, win rate, and gross profit. We're going to start with WIP. WIP means either work in progress or work in process. Those names get turned around and they mean the same thing. What are the jobs that you're currently working on, and have you converted your financials to the percent complete method? That's actually what someone is asking if they ask for your WIP report. They want to know that you are watching your jobs, you understand the profitability, and that your financials have been converted to the percent complete method. This report is one of my favorites. I joke that it is the one report to rule them all. If you don't have a work in progress report, you can check out our class on the WIP. It shows you how to create your first WIP and even tips and tricks to then take it to the next level. There's also templates in there, so we got you covered. The next thing to talk about is ROA. ROA is short for return on assets. Return on assets is loosely a calculation of net income divided by assets. You can make it a little more complicated than that, but that's really what we're doing, is just saying how much money do we earn on the assets employed. For our industry, for our construction industry, this typically means how are we using our equipment. We invest in equipment and then we need to return a profit on that equipment. So ROA for construction means, are we utilizing and are we effectively utilizing that equipment and making money on it? If we have equipment sitting in the dirt, chances are no, we are not returning money on that piece of equipment, but if we utilize it, then we are. I like to see at least about 10% ROA for contractors that use a lot of heavy equipment. Backlog. Backlog is the amount of work that you are under contract to finish. It could be a job that you haven't started yet, but you are contractually obligated to do the job. Backlog does not mean what you think it could possibly entail or how much revenue you think you can earn. It is how much you have under contract. Even further, it is the amount of revenue that you have yet to earn, which means you would need to know your percent complete so you can determine how much left you have to earn or how much left you have in backlog. Backlog then can tell you how much overhead coverage you have already built, and it helps determine break even and how much you need to finish the work. Very important term to understand, and it's very important to understand how to calculate it. I like to use the WIP to calculate backlog, but there's multiple ways to do that. In the WIP class, we do show you how to calculate backlog using a work in progress report. So if that's something that's of interest, it's in there. Next up, win rate. Win rate is just how much do you win versus how much did you bid. So if you bid 5 jobs and you won 1, you have a 20% win rate. If you bid 5 jobs, won 5 jobs, you have a 100% win rate. In the industry, it depends on what kind of work that you're doing and how big the work is. So smaller jobs tend to have a higher win rate than the very large jobs. The goal of this is to understand what your win rate is so that you can have the right amount of backlog for you. And finally, gross profit. Gross profit is your revenue minus your job cost equals your gross profit. If you just take all of the jobs that you're doing and put them in a pile and you say, how much did I bill? How much did I have in cost on those jobs? That equals gross profit. It doesn't include overhead. It is just what is generated from your jobs. Okay. I hope that helped explain just five of the terminologies that get thrown around in our industry. If you would like more of these done, just drop a comment and say, yes, please cover a few more. If you have something specific you would like us to cover, just let us know. And I have 2 resources for you. So if you like ratio analysis, scorecards, dashboards, we have a class just for construction companies that's called Financial Metric Mastery. You can check it out on our website. There's a link here on the screen. And if you like learning about what it takes on the financial side of the construction business, we have a specific class just for you. It's on our website. It's called Owner Financial Bootcamp, and it's going to take you through 7 days of the basics that you need to understand and run the financial side of your business. Thanks for spending time with me today. I always enjoy it, and we'll talk soon. Bye.